Hey folks, Andrew Packer here, and welcome to Trading Tips. And also, hey, welcome to 2020. 2019 was a great year for stocks. I think 2020 is going to be a pretty good year. Maybe not as much because we had this really big ramp up at the start of 2019, but things should still go pretty well. So with that in mind, let's look at 3 stocks that can give us some good returns going into 2020. Now, obviously, one of the reasons why I don't expect 2020 to be quite as good as 2019 is because we're not coming off this bear market that we had at the end of 2018 that really kind of depressed prices going into the start of the year. Stocks were just starting to come off that getting into 2019. Now we're at a point where we're kind of rallying. We're at these all-time highs where we've closed out 2019. And it's probably going to keep going for a little bit, but we're going to get some uncertainty along the way. We're probably going to get a pullback at some point this year. Usually one of those, 10% from the peak kind of drops that we tend to get before heading higher. And of course, it's an election year, so we'll probably see some uncertainty there. But that said, there are a couple of stocks that look like they're going to give investors some tremendous opportunities this year. So let's take a look at 3 of them. Now, the first one is one that is in the tech space. This is an area where technology lagged a little bit behind value in 2019, so it's an area where there's still some catching up to do, but these stocks are starting to move. This final rally of 2019 has been very good for tech names, and I expect that to continue. So while there are a number of technology companies that are still off of multi-year highs, and where there are a lot of opportunities, looking at just kind of some of the names that I keep watch and keep track of and invest in and trade options and the shares on, I think one of the top opportunities for investors this year is going to be Nvidia, ticker NVDA. Shares are around 330 as we do this video. They've been down kind of in the low 200s. They've started to ramp higher, but they have a lot more room to run. They can get substantially higher, especially as kind of things continue to do. So Nvidia is a graphics processing company. They manufacture this technology. It's something that you have in your computer that allows you to play video games, do a lot of kind of like high-end processing stuff, watch streaming videos, things like that. It's a technology that is replacing traditional processors in a lot of ways and for a lot of kind of the need for high rapid data processing. That's why you might hear about how graphics processors manufactured by Nvidia are being used for projects like self-driving cars, where there's a lot of data that's coming in real time that needs to be quickly processed and sorted out. And graphics processors have that speed and that availability to do that your traditional like Intel chip might not necessarily be able to do as quickly or as effectively. So that's an area where there's a lot of opportunity. There's a lot of future growth opportunities. So this is for 2020 and really beyond. But also, this is an area where a lot of investors have kind of bought in or sold out of based on cryptocurrencies. That's because graphics processors have been used for cryptocurrency mining over the years. That's been a little out of favor with some of the the big names like Bitcoin still down so much from their highs. But there is kind of that halvening happening in 2020 where the rate of new Bitcoin issuance is going to get cut in half again. That's an area where, as long as the prices are low and as long as graphics processor technology continues to get better, there still may be some opportunity there. And if you see an interest kind of in the cryptocurrency space, a lot of the money that will kind of look for opportunities will eventually filter its way into a company like Nvidia. So that's a big tech name for 2020. Let's talk about maybe a more traditional consumer goods play. In that space, we have McDonald's, ticker MCD. Giant fast food company. Everybody knows those golden arches. It's an incredibly famous and powerful brand. But shares of McDonald's have had kind of a bit of a rough time. They're only up about 9% for 2019. They lag the overall market by about 15% as a result of that big, powerful rally. And McDonald's actually does this a lot. It tends to lag during market rallies, but whenever the market has some uncertainty or when it declines, shares of McDonald's tend to outperform the market as a result. It's more of a slow and steady player, but for some of the volatility that we're likely to see in 2020, kind of maybe in the early spring, getting into the election, a company like McDonald's is going to do very well. And the other thing about McDonald's is they're kind of been in the news for a couple of bad reasons lately. They just fired their CEO for having an inappropriate relationship. They brought in a new person. There's a little bit of uncertainty there, and that sent shares from 220 down to about 195, and that's about enough of a pullback for shares where it's starting to look attractive again. And of course, the nice thing about McDonald's too, if you're looking to invest for 2020 and even beyond, is the fact that this is a dividend growth company. It's a company that has a history of raising its dividend year over year. It's raised it to about $5 a share right now. That's about 2.2%. That doesn't sound like a lot, but over the years, as the company continues to raise its dividend, either the yield's going to get higher or the share price is going to go higher to kind of keep that yield lower. And over time, the share price has done a very good job of going higher. So this looks like a good kind of well off the highs opportunity for 2020 for a more kind of traditional investment rather than tech. And then, of course, one last area that's always of interest and where we can get a lot of fast-moving action in the market is in the commodity space. Now, most commodities did very well in 2019. Pretty much anything you could throw a dart at went up last year. But one area that lagged a little bit relative to things like oil and gold was copper. And of course, this is a metal that's crucial for economic development. It goes into all sorts of electronic goods. It goes into wiring, whether it's for buildings, whether it's for piping, for plumbing. It's generally a sign of economic growth. And even though the stock market did well last year, global economic growth has been a little on the slow side, and that's hurt copper. But at current prices, the kind of supply and demand balance is a little bit out of whack. So in this area, we want to go with one of the best of breed copper mining companies, and that is Freeport McMoRan, ticker FCX. This is a company that's traded as low as $8 in the past year. It's already kind of up to the $12 range, but in a copper rally, this can be a $20, $30 stock or more. There's a lot of opportunity here, and as investors, we want to go kind of where that opportunity is, and looking at kind of the supply-demand imbalance that we're getting with copper, it'll probably start to show itself in higher prices gradually throughout 2020. And as investors start to pick up on kind of the rising price in copper, more and more money will tend to pile in as people want to get in on that trade, and that's where commodities can really shine. And of course, copper prices have dropped so dramatically over the past few years, and shares of copper mining companies like Freeport have dropped so dramatically over the years. We're getting in, maybe not at the absolute low point in the cycle, but at a point where we've already started to see an uptrend. And as investors looking into the commodity space, that's exactly where we want to be for 2020. So looking at some of these, we've got technology, we've got defensive goods, we've got commodities, and we've got companies that are off their highs. In two cases, they're definitely heading higher. In the case of McDonald's, it'll head higher over time. So that's three top picks for 2020 that can do pretty well and probably beat the average stock this year for all of these fantastic reasons. So that'll wrap things up for this edition of Trading Tips. Until next time, I'm Andrew Packer, wishing you good trading and good financial health.